Hello and welcome back to Crypto Saving Experts, where we talk about the latest cryptocurrency news and take a look at the markets so that we all know exactly what is happening. My name is Jess, and we do these live streams every single weekday. So if you are new here, please don't forget to like, subscribe, and hit that bell notification button. You may see that we are in a different background today because I'm on my holidays, but we still need to be updated on what's going on in the cryptocurrency space. So we still will be doing these live streams every single weekday. So make sure to continue to tune in. We will be back in at the normal time, starting tomorrow, early in the mornings, getting through the news and seeing what's going on in the space. So make sure to hit that subscribe button and the bell notification button so you don't miss out on these daily updates. Let's take a look at what's going on with the Bitcoin price right now, because we have already seen a new all-time high for Bitcoin, in fact, printed today. So let's take a look at that. We have Bitcoin trading at $72,667. Now, this is at 1.56% within the last 24 hours, but we did actually break through the $73,000 level and touch $73,665. Now, this is insanely bullish. We are seeing new all-time highs being created daily at this point in time. And it's so exciting to see this price action because typically when we do break through an all-time high, we do see a lot of upwards momentum very, very quickly. And I would say that we didn't really see that on the smaller time frames when we broke through the $69,000 level. And I think that the reason for that is because we are pumping from institutional investment here, not retail investment. Yes, we are pumping. Yes, we are seeing green candles. Yes, it's very exciting. But typically when we're breaking through a new all-time high, we're seeing insane price movements for the first couple of hours after breaking through an all-time high. Whereas this time it's been intense, it's been rallying, but it's been a little bit more relaxed than what we saw in the previous cycle, in my opinion. So I do believe this is because of the institutions investing and because this isn't coming off the back of retail investors, but we are seeing pump after pump after pump, and we are seeing the price moving in a more sustainable manner in a way. Now, obviously, you can look at this chart on the daily chart and say that's not sustainable, and I understand that. It doesn't really make sense to see this kind of price action. But if you take a look at what's happened in previous cycles, every time we break a new all-time high, it's not even been a bad time to invest at that point in time. Obviously, it's better to invest at the bottom of a bear market, but every time we've broken Bitcoin's all-time high in history, it's not been a bad time to enter. So if the same pattern happens again, we could be seeing some insane prices here. We've seen some analysts make stupidly high predictions. We've seen Kathy Wood say that she's being conservative when she suggests that Bitcoin could hit $1 million by 2030. So we are obviously very bullish on the potential here in the cryptocurrency space. And we are seeing other analysts as well saying, look, six-figure Bitcoin isn't unlikely. In fact, we're not just talking $100,000. I've been seeing price predictions between 200,000 and 500,000 for this cycle, which is absolutely insane. But if we take a look at the money flow coming in through these Bitcoin ETFs and the amount of money invested by institutional investors right now, I'm not ruling it out of the question. I do think it is possible here. When institutions are investing into the asset, we're not just seeing people say, look, oh, I'll buy a little bit of Bitcoin. We're seeing them put Bitcoin ETFs in their funds. We're seeing them add it in to allow people to get exposure to Bitcoin without people even realizing what Bitcoin is. We're also seeing them making new funds to basically get exposure to the Bitcoin price. And we are seeing companies say, look, actually, we want to expose ourselves 1% towards Bitcoin. And we're going to see that more and more, in my opinion, because MicroStrategy have seen a huge amount of unrealized profits off the back of their dollar cost averaging. And I think other companies are going to want to get involved as well. Now, before we get onto the cryptocurrency news today, let's take a look at what's going on in the chat. Good morning, good afternoon, in fact, everybody. Thank you very much for tuning in. As always, apologies for the change in stream time today. We will be back to morning streams tomorrow. It's just because I was on a flight this morning. Lee says, it's Jess under house arrest. I am on holiday, so I've just had to pick a small corner to film this video before I get back out to sunbathing in the sunshine. But I didn't want to miss the day. I wanted to make sure we still do today's stream. So and that's why the background's a little bit different. That's why maybe the sound quality isn't as good. But we're still here streaming every single day. I'm sure some of you may have watched Spud's stream. He's just done a stream as well at 2 p.m. today. So make sure to check that out if you have not already. He's been interviewing many different guests and projects within the last couple of weeks, finding out what's happening in different projects and the projects that Crypto Saving Expert are interested in. So it's definitely worth hitting that subscribe button, pressing the bell notification button, and tuning into these see what's going on and see where CSC are researching and what projects we're interested in as well. So make sure to do that. But let's take a look at what's going on with the Bitcoin price here. So obviously Bitcoin has been performing pretty nicely. Ethereum has not been performing so well within the last 24 hours. We are only up slightly within the last 24 hours for Ethereum. So Bitcoin has been outperforming it once again in the last week. Bitcoin is up over 8%. Ethereum is up just over 4%. So Ethereum is being outperformed by Bitcoin still at this point in the market. Now, this is typically unusual because we are only about a month and a half away from the Bitcoin halving, even less than that now. So typically Ethereum has started to regain some dominance against Bitcoin, but it has not been the case so far this cycle. So it's interesting here. And I think this kind of lull and this steady price action for Ethereum could be off the back of the analyst saying yesterday, do you know what? The likelihood of an Ethereum ETF getting accepted in May is even lower than first anticipated. So originally we were saying there's a 50% chance this Ethereum ETFs will go live. And now we're looking at about a 35% chance because of the lack of activity between ETF issuers and the SEC and custodians. And we didn't see this lack of activity when it came to the Bitcoin ETFs. There was a lot of activity on the run up to the deadline for the SEC, and we have not seen that with Ethereum. But hopefully that changes. Hopefully the activity starts to pick up, and hopefully the likelihood increases. And even more importantly, hopefully those ETFs do go live on the 23rd of May. But with that looking less and less likely, we may see Ethereum lag in the run to the upside. But I do still think we will see some nice returns there. Obviously, nothing is financial advice. That's just my own opinion. Let's take a look at what's going on in terms of altcoins here. BNB is performing well, up almost 8% within the last 24 hours. Ethereum, Solana, up over 5% within the last 24 hours. I'm very impressed here that BNB is up over 38% within the last week. That is insane price action. And AVAX as well, up over 34%. TON up over 66%. Polygon up almost 20%. We have been seeing some insane price action within this last week. Yes, the last 24 hours may have been a little bit of a lull, but we've seen Bitcoin create a new all-time high, and we've seen the weekly gains be pretty impressive. So definitely nothing to be complaining about right now. Good afternoon, Arkert and Christian. Thank you very much for tuning in. As always, very much appreciate it. Please don't forget to like, subscribe, and hit the bell notification button so you don't miss the latest crypto currency news. We do these live streams every single weekday, even when I'm away in the sun. So make sure to tune in. We will be back in the mornings doing these live streams from tomorrow. It was just today because I was on my flight to my holidays, but we are back now, so ready to be doing the morning streams here. So let's see what's going on in terms of the liquidation heat map, because this has been very, very accurate within the last couple of weeks. This is a heat map that identifies where traders are going to get liquidated on the Bitcoin price. You can see that there is a huge liquidation level down at just below $69,000. We've got one here at $71,300 as well. So these are acting like magnets for the Bitcoin price, because we know that Bitcoin takes the path of most pain. And if Bitcoin hits these price points, traders are going to get liquidated. That's what Bitcoin likes to do. So we are looking at magnets at those price points, whether it will just be a quick wick like it has been previously, or whether it will be a stronger move to the downside. We wait to find out. I personally am expecting to see some sharp wicks and nothing more than that, but anything is possible. We are in a bull market. I don't want to enter up only mentality. We are aware that we do see 20, 30% pullbacks in a bull market, but at this point in time, I am expecting a wick. But you never know. You never know. If we take a look at the Fear and Greed Index, this is at 81. To be honest, I was expecting this to come down further than this. We were up at 90. We've been kind of staying around that 80 level for the last couple of days. I was really expecting to come down further than this because I've been on crypto Twitter in the last 24 hours, and it's not been the most positive place when it comes to the Bitcoin price. Yes, we've had some really long-term bullish price predictions, but I've seen a lot of people saying, look, we've hit the new all-time high. That's the top. And I don't want to say it's ridiculous, because it is possible, and I'm not a financial advisor giving you financial advice. But every time we have seen Bitcoin break a new all-time high, create a new all-time high, it's not been a necessarily bad time to enter the markets, because it typically has rallied much higher than that. It may not do this time. We can't use past price action to predict what's happening. Well, we can use past price action to predict what's happening, but we can't use it as fact that it's going to happen again. Well, I like to look at history to see, as we all say, history does not repeat, but it can rhyme. Let's take a look at what's going on here. in the cryptocurrency news, first of all, the US is adding $1 trillion of debt every 90 to 120 days. So insane amounts there. The US's economic situation is spiraling out of control. On Monday, Robert Sterling posted a deep dive into the US's economic situation. The post outlined how mounting debt has worsened in the last 2 decades. Sterling began by stating, "This is the scariest chart I've ever made. This is what it looks like when a country is heading toward a financial precipice. Each color shows $1 trillion getting added to the national debt. Not that long ago, it took 6 years to add a bar. We're now adding one every 90 to 120 days." And when he says that not that long ago, we're looking at between 1996 and 2002. Now we're looking at every 90 to 120 days. So every 3 or 4 months. As seen in the image, the bars have gotten smaller and smaller as time has passed. Sterling then covered each presidential term and how the debt began to escalate. So the acceleration started under George Bush. Bush went into 2002 with less than $6 trillion of debt. Thanks to GWOT, military spending, and tax cuts, we probably couldn't afford $6 trillion, grew to $7 trillion in 23 months, $8 trillion in another 21 months, and $9 trillion in 23 months. In the global financial crisis, the US added another $1 trillion in 13 months, crossing into the $10 trillion mark for the first time. And we are seeing this get faster and faster and faster, unfortunately. Now, this is definitely not what we want to be seeing here. We are seeing the US dollar worsen as the time goes on, and the debt there for the US worsening. And this is definitely something to be concerned about when it comes to the US dollar. And this is one of the reasons as to why people turn to Bitcoin. Now, when we're looking at the debt here, what can happen? This can't continue on forever. We've seen this over and over again. One interesting statistic actually is to look at the length of time fiat currencies typically live. Now, I'm not going to say, look, we're not going to be using the US dollar in 10 years. I think that's an absurd claim to be coming out with. But if you take a look at the lifeline of a fiat currency, if you take a look at the mean amount of time a fiat currency stands for, you can see that the US is coming to around that age. So we are seeing they are getting into more and more debt. We are seeing they are printing billions of dollars. We are seeing huge concerns when it comes to the US dollar. And if you look at the timelines from previous fiat currencies, you can see that maybe we are hitting a point here where we could be seeing some big changes. I don't know when that will be, 10 years, 20 years, 30 years. But if we look at the statistics, things are changing quickly. But let's take a look at what else is going on in the cryptocurrency news here. Please don't forget to like, subscribe, and hit the bell notification button so you don't miss the latest cryptocurrency news. Good afternoon, Rob. Good afternoon, Rob C. Thank you very much for tuning in. As always, let's take a look at what's going on here. So Mike Novogratz calls the US government to take notice. The Bitcoin Bull is asking the government to acknowledge what the public chooses. Let me check that you can see everything that's going on here. Yes, you can. All good. So on Tuesday, Mike Novogratz urged the US government not to dismiss what American citizens choose to invest in. Novogratz's post likely comes after it was announced the Biden administration wants to bring back a 30% mining tax on crypto assets. I think mining tax on crypto assets is not what we want to see here. Obviously, Biden is going down the route that Bitcoin is bad for the environment and does not want to see that continue. So putting this tax in place kind of limits the amount of people that operate in the US, essentially. I mean, when these kinds of laws come in place, for example, when China banned Bitcoin mining, it wasn't a bad thing because it meant there was more decentralization for Bitcoin. But when we're saying rules like this, it's just slightly frustrating because we've been fighting with the US regulators for so long in the US government to try and acknowledge Bitcoin for what it is and regulate it in the correct way. And then just to continue to see rules like this be put in place that do kind of still try and push it to the side. I believe stuff like this still illegitimizes the space, and that's not what we want to see. We're seeing BlackRock, Fidelity, and Vanette get involved, and that brings legitimacy to the asset. But seeing the regulators and the government still try and put barriers in place for Bitcoin and cryptocurrency to evolve and develop it's pushing it to the side, and that's not what we're here for. And I think they're making a big mistake. When we're looking at this, there is always a first mover advantage when it comes to innovation and new technology. And we are seeing other areas like Hong Kong really try and get that first mover advantage. We're seeing El Salvador, who've made Bitcoin legal tender, make a huge amount of profits off investing in Bitcoin back when nobody else was. There is a huge first mover advantage when it comes to this technology and the cryptocurrency space. But what we're seeing is they are still trying to push it to the side. And I don't think that's a good thing. Mike Novogratz is pushing here. He is the Bitcoin bull. If you have heard that Martini guy's introduction video, you'll know who Mike Novogratz is. He's mentioned in that video. Every time I say his name, I think of that introduction song. But let's take a look at what else is going on in the cryptocurrency news. Please don't forget to like, subscribe, and hit the bell notification button so you don't miss the latest cryptocurrency news. We normally do these streams in the morning. It was just today I was on a flight, so we will be back to the morning streams from tomorrow. Let's see if we can get some more likes here in the chat on YouTube. I know that not many people are going to stream in at 4:30, but we'll be back to the normal time tomorrow. Let's see what's going on here. So we've got an article here about Coty. If you are interested in Coty, make sure to check that out on cryptosavingexpert.com. And we have a message from JP Morgan CEO. So Jamie Dimon has still not warmed up to Bitcoin. However, he has said that he is not going to stop investors to purchase Bitcoin. Now, this we've seen in the past couple of months huge changes in the views from institutions towards Bitcoin. So Fidelity, BlackRock, VanEck have all created Bitcoin ETFs. We've seen a lot of institutions wanting to get exposure to the Bitcoin price through these ETFs. Now, one thing that we have seen is Vanguard have said, we are not listing these ETFs. People that have ISAs in Vanguard cannot access Bitcoin ETFs because we do not like them. So that's what Vanguard have said. That has meant that they've lost some customers along the way. We've seen people complaining about this on crypto Twitter. I personally very much agree with that. You should not be making the decision for your investors. But Vanguard have chose to do that, say, look, you cannot invest in ETFs through our ISAs. If you do, you need to go to another broker. JP Morgan have been saying here, on the other hand, we don't agree with it. We don't like it, but you have a right to buy it. So they've said, I don't know what the Bitcoin itself is for, but I defend your right to smoke a cigarette. I'll defend your right to buy a Bitcoin. I won't personally ever buy a Bitcoin, says Jamie Dimon, the CEO of JP Morgan. And so this was in a recent live stream. He has still said that Bitcoin is only used by criminals engaging in fraud, terrorism, and sex trafficking. However, he has said that investors had a right to purchase Bitcoin. So he's not yet warmed up to Bitcoin, but he's not outright saying, do not touch it. He's giving everybody the right to get involved if you really want to. Now, he has also been asked about the US Fed and what should they do about the interest rates and the potential to cut those interest rates in June. And he has explained, I think they have to be data dependent. If I were them, I would wait. You can always cut it quickly and dramatically. Their credibility is a little bit at stake here. I would even wait past June and let it all sort it out. And I have said this opinion before on the channel. I do kind of agree with this standpoint because we have seen inflation go sky high in the US. We saw it hit 9.1% in June 2021. That is insane. Now, everywhere, there's kind of a general consensus that inflation should be at 2%. And we are on a mission to get inflation down to 2% in the US. Now, it did go higher than expected yesterday. I want to say it was 3.4%. Does anybody have the figure in front of them? I should know this. Let's see if I can pull this up here. US inflation rises to 3.2% higher than expectations. That was yesterday's news. And so how do we fix that? Well, essentially, when we have inflation, the Fed's tool to lower inflation is to increase interest rates. So that's what they've been doing for the last 2 years. But we've now hit a point where inflation is lower. So it's at 3.2%. We've got it down from 9.1%. That's that very significant change there and brilliant to see. But we're still on a mission to get that lower. Now, my concern is if we cut interest rates too quickly, inflation will start to rally again. Then interest rates need to increase again. And we end up with this battle of going up and down and flip-flopping. And what the Fed needs to do is make some cuts when it is sustainable and wait until it is sustainable because they're going to lose their credibility. And that's going to cause more problems for US citizens in the future. That if you're going to continue to rally it and then drop it and cut it and build it and cut it constantly, that's going to be worse for the average person than if you were just to continue to keep it high until you can start to sustainably drop it. So I don't disagree with this opinion here. And we are seeing here US reports 3.2 inflation in February, so that's year on year. The latter agency has since released the data. February's inflation coming in at 3.2%. So that's 0.1% higher than the previous month. But we are still seeing some. This isn't exactly what we want to see, so it's slightly higher. But overall, we've got it down from 9.1. I think it is going to be a long process. And I think when we hit 4, a lot of people thought, yeah, we're getting close now. But that's still 2 times the amount that we want to see. So there is still a significant difference there that we need to be battling. And that is the reason why the interest rates have continued to be high for so long. Now, when it comes to Bitcoin and investing, high interest rates aren't perfect, because high interest rates mean that people are taking out less loans and therefore has less liquid cash or excess cash. Therefore, less people are investing in assets. And that's why we see a negative impact on the markets whenever interest rates are rising. But we'll keep a close eye on this and see how this plays out in the coming months. It is important to see interest rates cut, but I just want to wait until it's sustainable. So I agree with Jamie Dimon on that point. But let's take a look at what else is going on here in the cryptocurrency news. Please don't forget to like, subscribe, and hit the bell notification button. We have 318 people watching this stream right now collectively on YouTube and Twitter. So make sure to hit that like button on whatever platform you're on. And if you're on Twitter, make sure to head over to YouTube and press subscribe as well, so you don't miss these live streams. We do them every single weekday, and we have Spud doing some interviews with some interesting cryptocurrency projects here on the channel as well. So make sure to press subscribe and press the bell notification button so you don't miss it. Let's take a look at what else is going on here in the news. So Grayscale files to launch Bitcoin mini fund with ticker BTC. The fund will provide several benefits compared to GBTC. So Grayscale submitted an S1 filing with the SEC for a Bitcoin mini fund under the ticker BTC. But why would Grayscale do this when they have a selection of spot ETFs for investors to choose from? So BTC would be similar to GLDM, the Gold Mini Shares Trust. And basically, GBTC investors would be able to get into it without the tax hit of selling the ETF. He also said it was a no-brainer for Grayscale to launch a mini fund. So to stop the exodus, my guess is they're really hearing it from GBTC investors trapped in there, paying 1.5%, while everyone else pays 20 to 30 basis points. This is a way to satiate those investors and perhaps attract new ones. So why wouldn't Grayscale simply lower the fees to subside the outflows from the ETF? Well, let's explain this from the beginning instead of reading through it. Let's start this from the beginning. So essentially, GBTC was a Grayscale Bitcoin trust. It was a trust that invested into Bitcoin and Bitcoin only, but it was not a Bitcoin ETF because the SEC did not allow them to transition into an ETF until BlackRock and Fidelity and VanEck and all of those other companies had completed their Bitcoin ETF filings. So Grayscale had this trust that held Bitcoin. Its price was not pegged to the value of its underlying Bitcoin, but it was just a Bitcoin ETF without the price peg, essentially. And then eventually it has transitioned into a Bitcoin ETF, which is brilliant. But the problem is their fees are much higher than their competitors. So Fidelity, VanEck, BlackRock all have given their Bitcoin ETFs much lower holding fees. And people have chosen to exit their GBTC position to enter the competition's Bitcoin ETF positions instead. So they have chosen that they want to create an alternative option for their investors. We've been seeing a huge amount of outflows for GBTC within the last couple of months. I'm sure you will all have seen this. There has been extreme amounts of outflows there of people choosing to leave GBTC, move into some of the competition, or just choosing to move away from Bitcoin ETFs in general. And now Grayscale are fighting this problem by offering a Bitcoin mini fund. And with this fund, GBTC investors will be able to get into it without paying tax from selling their Bitcoin ETF. Now, I think this is an interesting option because we have to remember a lot of the GBTC investors invested in the fund when there was a discrepancy between the value of the fund's Bitcoin assets and the actual Bitcoin value. And the value of the fund. So let's say Bitcoin was trading at $20,000 and it had 100, it'd be at, I don't know why I try and do the maths in this stupid way. It would be at 20,000 times 100. It would be at $200,000, the value of the fund. And people were able to invest in that fund for $100,000 or maybe $150,000. There was a 40% discrepancy at one point between the value of the Bitcoin in the fund and the value at which people were investing into the fund, the value of the fund itself. So people managed to get that huge discrepancy there, make that arbitrage trade. And now that discrepancy is closed because GBTC has transitioned into an ETF. A lot of people are saying, look, we don't need to be invested in this anymore. We can look at some others. Thank you very much, Rob, for that donation of £7.50. Thanks for not even taking a day off, even when on holiday. Have a cocktail on me later. Thank you so much for that. I very much appreciate it. I've come on holiday today, hence the difference in background. We will be back to the morning live streams tomorrow. Thank you very much for that. That's really, really kind. We will be back to the morning streams tomorrow. It's just because I was on the flight this morning, but I'm here. I'm ready to do the live streams again, and we will not miss a single day on this holiday. Let's take a look at what's going on here. I really appreciate that. What's going on here? So I've lost my train of thought. GBTC investors, a lot of them made the arbitrage trade. A lot of them have made the profits from that. Either A, they are selling and moving elsewhere. B, they are going to the competitors because of the lower fees. Or C, they feel trapped because they're invested in this Bitcoin ETF, but the fees are high compared to the competition, yet they don't want to sell because then they get the tax liability. So this is a really interesting opportunity for those investors that don't want to expose themselves to the tax, yet they want to have an alternative option. So a logic question regarding GBTC is, why wouldn't Grayscale simply lower the fees to subside the outflows from the ETF? Now they've explained why Grayscale may have gone this route instead of lowering fees to match other ETF issuers. There was no fee included in the filing, but Seyfarth stated that he was pretty sure it would be a non-taxable event for investors to rotate into a mini fund from the ETF. And Seyfarth stated this would help those not wanting to flip into another ETF due to the capital gains taxes they would face. So if we take a look down here, Grayscale can then use the BTC ticker as they purchase an equity share in the ETF firm that owns it. Clear shares. Regarding the potential timeline for a mini fund to be approved, Seyfarth estimates it could be anywhere between 60 and 270 days, but he stated he wasn't sure. So it's interesting here. I mean, it's strange to see that Grayscale could have a fund with the ticker BTC. I don't really like that. I want it to be kept to the side for. I don't know. I don't know. It's Bitcoin's ticker. It's Bitcoin's ticker. That's not Bitcoin. That's not pure Bitcoin. Bitcoin is a self-custody asset, and investing in through ETFs is not. So I don't like that. I think it should be kept to the side, but I don't think my opinion will matter too much to the exchanges there. Let's take a look at what's going on in the rest of the cryptocurrency news here. Please don't forget to like, subscribe, and hit the bell notification button so you don't miss the latest cryptocurrency news. We've got here Coinbase seeks to raise $1 billion from convertible senior notes. The top US exchange is mirroring MicroStrategy's move. So Coinbase announced it would move to raise $1 billion from convertible senior notes. We did see this for MicroStrategy. They moved to raise $600 million from convertible notes, which ended up totaling $800 by the end of the raise. The company imposed an interest rate of 0.625%. So essentially what's happening is they are saying, look, we want to raise some funds and you can redeem shares in our company at any time. But if you hold these notes, you earn interest. So you will earn 0.625% payable on the 15th of March and 15th of September for MicroStrategy. And that you are able to then purchase the MicroStrategy shares at the end of that in, was it 2030? Don't count on me for the dates there. I'm not 100% sure. But MicroStrategy used the fund to put funds to purchase 12,000 Bitcoin this week. And now it looks like Coinbase are looking to do something similar. So Coinbase also expects to grant the initial purchases of the notes a 30-day option to purchase up to an additional $150 million principal amount of notes solely to cover over allotments. The notes will be senior unsecured obligations of Coinbase. We will accrue interest payable semi-annually in arrears and will mature on April 1st, 2030, unless earlier repurchased, redeemed, or converted. So that's what's happening there for Coinbase. Let's see what else is going on here. So international property law change not required for NFTs, says the US government. Despite a call for action, there will be no specified protection for NFTs. I mean, we've seen this again. How many times can we have a call for action for regulation in the US for them to say that we don't need it and we're not getting it? According to a report, the US government will take no stance on intellectual property infringements. On Tuesday, the US Copyright Office and Patent Trademark Office declared it would not make any changes to laws to specify NFTs. We've seen this for digital assets on the whole right now when it comes to the US. I honestly, I'm not surprised when I see this article. We've been asking for crypto-specific regulation for a very long time. The SEC have not provided it. Now we're seeing the USPTO not provide it. When it comes to the SEC, it means that the SEC have lost arguments in court because their regulation is subjective. Now we're seeing them deny the idea to make crypto NFT specific laws as well. Very difficult to see this, because how can we grow this industry when the guidelines seem to be unclear and there seems to be unfair laws in place, because laws were created before this kind of technology really came about and became so mainstream. But that's what's happening there. Something we've just got to take on the chin at this point in time. Coinbase have been rallying and making huge petitions for regulation of digital assets when it comes to the SEC. Maybe we'll see more of this across the board when it comes to NFTs. We're seeing regulation of stablecoins recently as well. So big changes coming, but hopefully we get somewhere within the next couple of years. Let's take a look at what else is going on here in the cryptocurrency news. Please don't forget to like, subscribe, and hit the bell notification button so you don't miss the latest cryptocurrency news. What we are seeing here is another IBIT record, as ETFs sees over $1 billion in inflows in one single day. So IBIT broke another inflow record, as the total inflow into the ETFs topped $1 billion yesterday. Bitcoin ETFs broke new records, pulled in $1 billion for the first time on the 12th of March. This is what I keep saying. These Bitcoin ETFs are not a bubble. What we've been seeing is them breaking and smashing through their own records over and over again. $1 billion has flown into one single Bitcoin ETF in just one day. And this is why we are seeing Bitcoin rally so significantly. GBTC witnessed further decline, so Grayscale's exchange traded fund has witnessed outflows after outflow. This is what we've just been discussing. Either those traders are looking at the competition for lower fees, or they're moving out of Bitcoin ETFs because they've made that arbitrage trade on GBTC. But we're seeing some changes there. Obviously, the outflows are continuing for GBTC, but it can't last forever. And for the other Bitcoin ETFs, they are all performing as well as possible. Right? Can you still hear me? Because my headphones just made the noise as if they have run out of battery, which is strange because they were charged. Hopefully this isn't an issue. Let me know if you can still hear me. If you can't still hear me, then that is a problem, I guess. It sounds like you can still hear me. Maybe they're just low on battery, which is weird. But we can carry on. It looks like you can still hear me. Let's carry on with the last article of the day anyway and see what's going on here. Please don't forget to like, subscribe, and hit that bell notification button so you don't miss the latest cryptocurrency news. It would really help, because this is an afternoon live stream when we don't often do afternoon live streams. So not many people know we're doing this live stream today, but we will be back in the mornings from tomorrow. So make sure to stay tuned and hit the subscribe button so you don't miss it. Thank you very much, Rob, for letting me know that you can hear the stream fine. Blast mainnet halts block production here. So the layer 2 network has run into an issue on Wednesday. Sorry, the Blast project posted on Twitter saying the Blast mainnet has stopped producing blocks due to issues relating to Ethereum's Denkin upgrade. Core engineering contributors are working on a fix. We'll share an update and post-mortem once the fix is live. So another network takes a pause. In February, we saw Solana witness its first outage in 1 year. Later in the month, Avalanche encountered an issue. So we are seeing this a little bit more recently, which is not brilliant to see. But let's take a look at what's going on with the Bitcoin price here. We are getting closer and closer once again to that $73,000 level. My phone is going insane within the last couple of weeks. Again, Bitcoin's creating an all-time high. Bitcoin's crashing 2% in the last 2 minutes. Bitcoin's creating another all-time high. It's been absolutely insane amounts of volatility here. If we take a look at what's been going on the 1 hour chart, I do believe that we have some sort of nice level of support running across here. And that brings us at 71,865. We also do have a level of resistance that we can take from these 2 points that takes us to 73,665. But what I really want to point out here is that if we go to the 24-hour chart on the Bitcoin liquidation heat map, we do have some magnets below us, with one being at 71,318 and one being at 68,931. We won't definitely wick those points. However, they are acting like magnets. So I'm keeping an eye on them. But that's all we really have to be watching right now. The fear and greed index is surprisingly still high. I expected it to be slightly lower than this because of the FUD I've been seeing on crypto Twitter in the last 24 hours. Overall, Bitcoin price looks good. It looks healthy. It's just those liquidation points that I want to be keeping an eye on. Let's take a look at the chart here quickly. Dream Tank says Dogecoin for the win. Hello, Billy Bullish. Thank you very much for tuning in, as always. And Jay Mizzle. Rob C, have a good holiday. Thank you very much. On that note, I am going to turn off today's stream. So thank you very much for watching. As always, I hope you have enjoyed. Please don't forget to like, subscribe, hit the bell notification button. That's all for today, and I will see you back here in the morning. Goodbye.